Good morning, investor and corporate. Welcome to Set Digital Roadshow third quarter 20 and 21 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15 minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite PTT Global Chemical Public Company Limited to start the presentation, please. Thank you very much.
Thank you very much. Stock Exchange of Thailand. I'm Jittasap Kunthornpan, Vice President, Corporate Finance and Investor Relations. And I'm with Kun Praveen, Investor Relations Manager. For the presentation, before we start, I'd like to highlight on the cover page that you see in the middle that is the number 0 that mean that we have announced the latest target to be a net zero emission by 2050 in order to comply with the COP26. That is the latest development and what we like to communicate for the net zero target of the company in terms of the sustainability development. Before we go into detail, we're glad to announce that for PTTGC, we ran in the DJSI for the 9 consecutive years, but for this year is the 3rd consecutive year that we ranked the number 1 in the chemical sector for the DJSI. And on this page, you can see that we also get a recognition in terms of the sustainability development, both international and domestic accreditation. For today, in the agenda, we cover in 3 key areas. The Q3 key highlight, the strategy execution, and the market outlook. For the first part, for the 3Q, the performance highlight, as you know that we just announced the result of the 3rd quarter, and it still keep the momentum from the first half of the year. We have a revenue about 112 billion Thai baht with the adjusted EBITDA of 14 billion Thai baht, and we have net income 7 billion Thai baht. In terms of the 9 months, on the right hand side, you can see that we are able to reach the record high of the 41.7 billion Thai baht in terms of the net income. This 41.7 billion Thai baht is also include the extra gain from the sale of our investment in the GPSC, roughly 14 billion Thai baht as well. And that's the reason why we have a record high for this year, for the even for the first 9 months. In terms of the key performance, as you might already see more detail, the positive factor for the 3rd quarter is about the increase in terms of the selling volume and by the new capacity of the ORP, the new naphtha cracker, PTA and PET that we finished the bottlenecks and expansion. It's also supported by the strong performance of the aromatics and the performance chemical chain, especially for the phenol chain. The negative factor for this quarter is mostly from the less capacity from the refinery, which have a 25-day shutdown, and we have a lower contribution from the JV and associate as well. But in the first quarter, this quarter, we already complete the key activity on the right hand side. As you see that we finished the resale of our treasury stock since the end of September, so there is no overhang issue on this area. We announced the interim dividend for the first half performance or 2 baht per share. In terms of the restructuring, we complete the divestment of the Emily Oleochemical in Asia Pacific. However, for Emily itself, we still be a shareholder 50-50 with the Sandabi plantation in North America and Europe. The reason that we still hold North America and Europe because those locations have specialty oleochemical business, which is in line with the long-term strategy of the company to focus in the performance chemical or the specialty chemical. Meanwhile, reduce the exposure on the basic chemical. Lastly, it's about the deal execution. There's still two to be complete. The first one is about the Vinitai or VNT delisting tender offer, which we announced since the beginning of the year. We anticipated to start to do the tender offer after get all the approval in December, and the deal will be complete by early of next year. Another one is about the Allnex itself that we announced the deal since the mid of this year. Everything is still on schedule. We anticipated to close the deal of Allnex by end of this year, and next year we are able to realize the benefit and consolidate of Allnex performance since the beginning of the year. So that's the overall the key highlight of the third quarter. In terms of the strategic execution, that's we based on the 3 key strategy that you might familiar: step change, step out, and step up. Step change is about the support and then strengthen our existing business. On the left hand side is what we already complete in this year. We complete in terms of the feedstock flexibility enhancement by having the new naphtha cracker or what we call ORP in June. We complete the new capacity of the value chain extension for the propylene chain to produce the propylene oxide and the polyol since the beginning of the year. We complete the debottlenecks and expansion of the PTA and PET in order to well integrate in terms of the aromatics chain. And lastly, it's about the portfolio adjustment, which we complete the disposal share of the GPSC from 22.73% to 10% in order to focus more in the chemical investment. And the last one is about the Vinitai delisting, as mentioned. On the right hand side is the way forward that we are looking to implement from the on top about the integration and the diversification that we try to have a more well integrated from the upstream to the downstream. So in the future, you expect more about the integrate in terms of the feedstock flexibility that will help us to have a more in terms of the cost competitiveness, efficiency improvement, and the value chain extension. In terms of the market enhancement, we have strategy that we try to implement and to have more HVP or the high value product in our portfolio. This by exploring more opportunity of the polymer products into the HVP market. Currently, the HVP in our portfolio is only about 29%, but we try to have a more, like to be 50% by the next 5 years. By doing so, we sell more of the polymer product to the niche market that we are able to command in terms of the margin and the market share, which are in the 4 key area on the slide as you see. And the last one is about modernization and innovation that we try to improve our work process, not only our plant, but also in the back office and other operation as well by employing more digitalization or the AI in our work process that will improve our long-term competitiveness and cost efficiency as well. For the next strategy, what we call step out is about the explore more opportunity for the long-term growth. On the left-hand side, this year we complete the HVB acquisition that in the Allnex for the coating resin. We still explore opportunity for the second home base. As you know that we explore the project under the US Cracker project for many years. Now we still in the process of screening of the new potential partner to work with us in the project, which we expected that might be by mid of next year to see more clarity on that. And the last one is about the corporate venture capital that we try to explore the new technology through the invest in VC fund and the startup that will help to support us in the future. The way forward that are waiting for us for the HVB, of course, the all next after we complete the closing by end of this year, next year and the year onward is a challenging year for us in terms of the integration and the alignment between GC and all next together, as well as in terms of the new business opportunity, in terms of the net zero target as well. In terms of the second home base, the US Cracker project is not the only opportunity in the US. We still explore for more opportunity as well, like propane export terminal, recycling project, or the polymer trading. And the last one is for the CVC, is still the ongoing process that we still explore more opportunity. The last strategy, what we call step up, is about the sustainability development. On this page, we like to give you the illustration on what we have done and what we get the recognition in the international floor. For example, on the left-hand side, for the COP26, we are the only one Thai corporate to participate in the event in the Glasgow, UK. On the next page, you can see that, as I mentioned, we got the first rank for the DJSI chemical segment for the third consecutive year, which we are proudly on this to be the ongoing sustainability leader. And on the right-hand side is about the sustainability award of honor that we get from the Stock Exchange of Thailand for the fourth consecutive year. That's a briefing for the third quarter performance, the key highlight of the strategy and the recent development. Next year is quite a challenging year for us. On the left-hand side, you can see that in terms of the external market factor, the global economy recovery is what we expect, and that will help to support the market growth and the recovery of the demand next year. However, in terms of the supply side, we still have to keep our eye on the new wave of the petrochemical capacity, especially from North Asia that will come to the market. That what will be the effect from this one. In terms of the crude oil price fluctuation, we still have to see because they have a lot of impact, especially for the demand of the crude oil that will have a factor from the COVID-19 situation, the trade tension and the geopolitical tension between like US and China is one of the key things that we have to closely look. And the last one is about the sustainability trend, that what will be the impact to the market, what will be the new requirement, and what we have to comply with. These factor are the things that we have to closely look. On the right-hand side, you can see that it's about internal operation for ourselves. Next year, even though we have some shutdown, the turnaround schedule of the refinery and the olefin cracker, but the overall capacity is still expected to be increased due to the new investment that we have this year, and incorporate of the new capacity of Allnex with us since the beginning of the year. So that's the reason why we still expected that the top line volume will still have a growth about 7% from this year. In terms of the utilization rate, is quite close with 2021. Some might be have less, especially for refinery that have a scheduled turnaround. But in general, we are able to run at a full load. Next year, the key highlight that we have to focus on the left-hand side is about the all-net integration. As mentioned, that we have to focus not only in terms of the business integration, but for the finance part as well, that we are able to buy and explore more opportunity in terms of the refinancing plan. In the middle is about the Thai integration and the restructuring. We expected that the delisting tender offer to be complete by early of next year. If everything goes as planned, we will explore the opportunity in terms of the restructuring and to find the synergy and collaboration between Thai and the AGC in the new core as we disclose to the Stock Exchange of Thailand. And the last one is about the new capacity that will come to the market from ourselves. Since the beginning of the year, we have a new recycling plant, 45,000 tons. We have the new PP line under JV company called HMC Polymer, 250,000 tons in the mid of the years. We have the super engineering plastic of the PA90 HSVC by end of the year, which operate under the JV company called Kulele as well. On top of that, the year onward, we still have the project of OMP that we modify one of our cracker to use more propane and LPG, and the new PLA plant, polylactic acid, which is the bioplastic plant that invest by our JV company Nature from the United States. They just announced the investment in Thailand by capturing opportunity and advantage of abundant the agriculture feedstock like a sugar cane in Thailand to be a feedstock for the bio-based production. So that's overall of our strategic execution. For the market outlook, I will ask Praveen to present on this part.
Okay, so we move on to the information on the market outlook on how the company looks at the forecast for the next year as well. So first we start with the outlook on the crude oil price. So as you know that so far the price of the crude oil has increased significantly in this fourth quarter. And now we're seeing some slowdown a little bit, but overall we think that the range will be around $82 per barrel. And that's really been affected by the easing of the COVID situation, which drive up the demand for crude oil. And also the fact that in the winter season, there has been the increase in the natural gas price and also the coal price as well. So that has turned some of the demand more toward the crude oil price as the substitution for those products as well. So those are the key factors that has been driving up the crude oil price. But as we look into the 2022, we think that those situation will normalize back to normal, and there will be slower down in the price of the crude oil. So we think that in the range of $72 to $75 per barrel for the average of next year, which are some of the situation that we have to monitor on toward, because that will also have impact on our petroleum product price and also our petrochemical product price as well. Next, on our petroleum product, as you can see on the graph here showing the spread for diesel, gasoline, and fuel oil. You can see that in the fourth quarter, the spread of all the product has also increased significantly as well. This is mainly in line with the uptick of the demand for all of these products as there's more opening of the cities and less restriction on the transportation as well. So that means there's more demand for products like diesel and gasoline as well. And as we look into 2022, we also think that as the winter situation become better and there will be potentially less demand for this product to use as the heating purpose. So we think that overall the price for diesel will be ranging around $12 to $14, and for gasoline to be $11 to $12, and for fuel oil to be $13 to $14. The supporting factor mainly will be coming from the easing of the COVID situation, where there will be more demand coming from the transportation sector. Next, for the petrochemical product. Firstly, we start on the aromatic chain. As you can see on this page, we show the integrated margin for the paraxylene value chain, which is integrated to PTA and PET. And at the bottom, you can see the benzene value chain, which is the integrated of benzene and phenol chain. So on the top, for the paraxylene, you see that the margin for paraxylene so far in this fourth quarter has been pressured by the effect from the dual control policy in China, which caused some of the downstream PET plants to have to slow down their production capacity because of their location in some of the regions where they haven't been able to meet the power consumption restriction imposed by the government. So that means that there will be less demand for the paraxylene so far as we have seen in the fourth quarter. But as we look into 2022, we think that the dual control policy will ease up, and also as there will be more of the new capacity of PET coming into the market as well. So that will also help to support the demand for PX and PTA in 2022. So as a whole, in terms of the integrated margin for 2022, we think the whole integrated margin will be in the range of 470 to 490, which is quite in line with 2021. For benzene, you can see that this year has been quite a healthy margin level for benzene since the first and the second quarter, where we saw some supply shortages, especially in the US. And another factor that helped to support the benzene chain is the supporting demand from both the phenol chain and the styrene monomer chain, which has been having quite a healthy margin for a number of quarters now. So for 2022, we think that the benzene level will drop slightly from this year, given that the supply situation will improve, and as we've seen that the inventory level in China has already gradually increased up to almost close to the normal level of the inventory level for benzene at the current level. So overall, that means that the integrated margin for the benzene chain for next year will probably be slightly lower compared to 2021. Lastly, on the olefin chain, first on the top is on the integrated margin for the ethylene derivative, which we show here on the blue line chart is the HDPE price. You can see that the price has been performing quite well in 2021, and currently in the fourth quarter it is close to $1,200 to $1,300 per ton, and that's also driven by the impressive demand for polyethylene and also the supporting of the high crude oil price as well. As you can see that the spread for the HDPE over naphtha player has been squeezed down to below $500 per ton. So that means there is less margin for the naphtha cracker producer. But for PTTGC, we mainly use ethane as the feedstock for the olefin chain. So we are able to have the advantage over the naphtha producer who have to bear the higher cost from the naphtha as well. So if we look at the forecast for 2022, we think that the PE price will still maintain at close to $1,200 per ton for all the reasons that I mentioned for the strong demand and also for the crude oil price supporting factor as well. At the bottom on the propylene chain, you can see that the polypropylene price in the light blue one is close to the is also quite healthy, similarly to the polyethylene. And for next year, that should also remain to be the case given the high feedstock price and also the supporting demand. And for the last one on the blue line is PO, the propylene oxide. As you know that this year has been quite a very healthy price level for propylene oxide at close to $2,000 per ton. So for next year, as there will be some new capacity coming into the market, so that might help to cause the price of propylene oxide to decline slightly. So that's all the presentation.